at this point I could adjust for my deltas. I could buy 200 shares of the Qs at this point and adjust. However, in gamma scalping, you want to adjust as much as possible so that you can scalp profits from the stock. In theta scalping, you want to wait a little bit longer. You want to wait till the delta is at maybe 250, 300 even before you make your first adjustment. You don't want to have to adjust too much. The reason is if you do go ahead and buy 250 shares of the Qs now in order to adjust your delta and it moves downward, well, you're going to lose money on your stock. Of course, you'll be delta positive, so that you'll be able to collect that money every single day, and you'll probably more than make up for it. But if you do adjust and it goes down, you're going to lose a little bit of money on your position because of the short stock that you have or the long stock that you have. So you don't want to adjust too much with these types of positions. Now when it starts to get to a point where it's 300 deltas, then I would definitely adjust. If this price doesn't move back in line tomorrow, then I'll go ahead and adjust it. I'll probably buy a couple hundred shares in order to get it to relatively delta neutral position. But that's exactly what we do when we theta scalp. We want to keep this in a delta neutral position so we can collect the maximum theta every single day and be in a profitable position all the way until expiration. So the closer that we get to expiration, the better when we're delta neutral. And as we get closer and closer to expiration, obviously our white line continues to move. And the nice thing about this is, let's say we're November, September 10th, and we're only 6, 7, 8 trading days from expiration. Well, right now we have a profit of $2,125 on the position, and we're 359 deltas short. Well, if we want to, we can go in and purchase 300 shares in order to get us back to delta neutral. The nice thing about this is we can do this right up until expiration week. Remember I told you that price in the last week of expiration is the most critical component and the reason why in the one risk that you have going into expiration week, holding calendars, double calendars, etc. Well, when you adjust with the stock, you can adjust your deltas anytime you want and bring them back to delta neutral position in order to collect the maximum amount of theta just before expiration. So let's say right now that we have about 7 or 8 days before expiration of the September options. I currently have a profit of 22,047. Well, my maximum profit is 3,099. It came down a little bit because I bought the stock. But that's still $1,000 difference. If I needed to adjust, let's say the price went up. Well, let's say it just went down a little bit, and then we'll look at an adjustment on the upside. It went down a little bit, and I'm 458 deltas long. What I could do is simply sell out my stock, and that puts me back into a delta neutral position. Now I'm collecting close to 90 theta dollars a day in theta as I get closer to expiration. And let's say it moves up $1 now, which is a pretty big move for the Qs. I just showed you there was about a 300-point move on the Dow, and the Qs only went up by $1. Well, now I'm slightly off delta. I'm actually negative 402 deltas. I can adjust by buying 400 shares of stock. And if it really doesn't move, I haven't lost any money on the stock, but I continue to collect theta, and the theta gets larger and larger the closer it gets to expiration. Now it's $100 a day. And that gives me confidence to hold the position right into expiration. collecting the maximum amount of theta and the maximum amount on the position. We did lose a little bit of money by adjusting our position with stock, but not as much as we did if we had put on calendars to adjust. Plus, it would have been extremely expensive to adjust with calendars because remember we had to put on like 45 calendars in order to get back to delta neutral one time. With stock, you can continually adjust your deltas back to a delta neutral position so that you can go right into expiration with your position as long as some of your short positions aren't in the money. Then it creates other risk, for example being assigned. But you can get relatively close to expiration using this method of theta scalping with the stock in order to get delta neutral. By that way, you can collect as much as you possibly can from the theta, and it's not as active as gamma scalping. With gamma scalping, you really need to be there every single day to take advantage of the price movements in the stock in order to scalp the profits out of the stock as it moves around the delta. With theta scalping, you wouldn't have to look at it very much. In fact, I barely look at it more than a minute or two a day just to see where my current delta position is. In fact, on this position that I've had now for over a week, I have not adjusted it even once. We are slightly long or slightly short delta, and if I need to, I will go ahead and purchase 300 shares of the stock once it hits negative 300 deltas. But that's about all I'm going to have to do for quite a while. Unless the index gets extremely volatile and it's moving up and down a point a day, you know what? I'll just let it move up and down a point a day because it doesn't make any difference to my position.